Right now, and we are now 2 days past the election, but it's still too early to call the winner of the presidential race.
What we do know is Congress will still likely be divided. That could have an impact on your wallet. Joining us today is Samantha Pahlow, Senior Vice President with Ferguson Wellman. Good morning. Thanks for joining us.
Good morning, Jenny and Emily. Thanks for having me.
Absolutely. So yesterday, we saw the stock market rise pretty sharply yesterday amid all of the unknowns here in the election. Stocks up again to start the day this morning. What's with the positive trend while everyone is sitting here just kind of biting their nails?
Well, so normally uncertainty in the markets creates volatility, but this year, most investors were actually prepared for the fact that we may have a delayed answer. So that the fact that we're dealing with that now was not necessarily unexpected news.
That's interesting. And, we are seeing, along with that chaos, legal challenges, possible recounts in some of these states. So how will the market react, as those lawsuits roll in and those recounts possibly come up?
It's hard to say exactly how it will react, but we do know that as long as it's unclear, there's the potential for volatility. But once we have an answer, we'd expect that volatility to calm down and for the markets to continue the sort of upward trend that we expect based on where we are now in our economic recovery.
So beyond the election, the economy could be in for a rough winter here, especially as we look ahead to what we might be dealing with in the pandemic over the months to come. I know the economy and the stock market don't always go hand in hand, but if we hit a really rough patch economically, what could that mean for investors?
Well, you're exactly right. The stock market and the economy are very different things. The economy is the result of what has happened, and the stock market is predicting what we expect going forward. If we see continued bad news on the virus front, it's possible that we may have some more targeted shutdowns. We're all aware of that. That is definitely in the news and on the front. We don't expect widespread sort of draconian shutdowns that we had before. So our best case is that the market reaction would be muted, especially with stimulus talk on the forefront, and now an unlikelihood of a major tax hike, which was something that people were worried about before.
Okay. Is there anything that people can do right now if they feel just kind of they're feeling the weight of the uncertainty and they're unsure about their financial future? I mean, should they be investing right now, or is this not a good time? I mean, what are you telling people?
Absolutely. Frankly, people are pretty overwhelmed. There's a lot of emotion when it comes to your money and the stock market and politics. But what we want people to keep in mind is to not panic. There's very few things in life where making emotional decisions serves us well, and staying disciplined has rewarded investors long term. So number two, think about your portfolio. Make sure that you have the right portfolio for you. Know what your risk tolerance is, your time horizon, and make sure that your portfolio matches those. And finally, keep in mind that volatility does create opportunity. Now may very well be the time to take that cash you have on the sidelines and consider investing it in undervalued asset classes and stocks, et cetera. It's always a good time to begin a disciplined investing plan. Staying on the sidelines simply hasn't rewarded investors over the long run.
It's definitely been a year of financial to-dos. I know there's lots there to take a look at. So, Sammy, thank you. We appreciate you joining us this morning with all the advice.
My pleasure. Thanks for having me.
Of course. And